Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to today's live stream. So, very volatile day in the metals. The silver price at the lows of the day was down over 5%. Right now, silver futures are down almost 6%. Gold price down 2.4%. The SILJ junior silver miners right now down 8.6%. So, sometimes, viewers will accuse me of hyperbole if I say, oh, there's a silver price crash. But this is a pretty sharp drop. This is a pretty sharp drop. But we kind of knew that this was coming. I think that, not to the day, obviously. I mean, I wish I had known exactly that today was going to be the day. But the metals had gotten rather overextended. And, yeah, maybe they can always get more overextended, of course. But a correction day is a very bullish sign for silver, actually. And look, nothing in today's live stream, let me just get this out of the way, is financial advice. I'm not telling anybody what to do. I'm just sharing with you my thoughts and, what I did today. What I did today was I bought a lot of paper silver, actually, kind of all the way down. I would take a position, the price would fall a bit more, and I would increase that position. And so, I'm loaded up here, and I think that we have in fact seen the bottom. Could silver correct further? Could it drop down back below 50? Sure, anything is possible, but I think it is very likely that we are due for a bounce here in a bull market. It's not unusual to see these sharp corrections. And one thing we've seen thus far with silver's ascent is that the pullbacks have been sharp, but they have been short-lived. Now, also, I want to draw your attention to this orange line here that you see silver broke above back on Monday, October 13th, right? Not very long ago, a few days ago, we really officially broke out above this level. We had a nice little ascent, but now we've retested that line. Now, if I zoom out, this is a daily chart, but I'm going to zoom way out. And we've looked at this chart quite a few times recently, but it bears revisiting in the context of today's move. So this is a 3-month chart of silver. You see it's a huge cup and handle pattern dating back to the 1980 high. And this orange line represents the breakout point for this extremely bullish chart development. Now, today's move could be the big confirmation of this breakout. If we do see a rally from here, if silver does not break down further, what this means is that this level, which dating back to the 1980 high has been resistance, has now flipped and turned to support. So this very well could be just a correction in a bull market. That is what I am forecasting. That is what I am acting upon, that information. Now, if you want to do some stacking today with the discount, this is in my opinion, my favorite type of day to stack on when you have a sharp sell-off. Metals are on sale. SD Bullion has got some deals over here on their deals tab. I do want to draw your attention to this. They have got 40% US Kennedy half dollars at spot. I would stay away from these. You start seeing these come out when premiums are rising, which is the environment that we are in currently. There is the silver freeze. We covered that in a video on Monday. There's a great post over at SD Bullion blog covering it. We're going to start seeing premiums rising on these bullion products. And I wouldn't go for the cheap stuff in this case. 40% silver, very difficult and expensive to refine back into pure silver. Right now, there are still some deals out there on junk silver. The premium on the 90% junk, which I do like, remains low. They've also got these 5-ounce silver coins on sale. These are not bad. This is a 5-ounce sovereign coin from a sovereign mint. And sometimes you get some really cool stuff in these random listings. So anyway, just some of the things that are on sale over there if you do want to take advantage of today's dip, which, I haven't actually added physical today. I've been adding physical, here, and here. So I've added quite a bit of physical recently, but I did go ahead and load up on paper positions in silver today. From a technical standpoint, silver is looking very good. I want to cover some news that broke yesterday, which suggests to me that silver is not only headed much higher, but that physical silver specifically is going to be in very high demand in the very, very near future. At least that's my forecast. So there was a story about regional banks that was published here yesterday on CNBC. Yesterday, there was this sharp sell-off in a couple of regional banks. Now, you might remember the last time that we had a regional banking crisis in March of 2023, what happened with the physical silver and gold markets, right? You couldn't get the stuff. Maybe you could get something like that 40% silver, right? That might have been available. But the good stuff, the junk silver, the silver eagles, the premiums skyrocketed. Now, this was primarily Zions Bank Corporation and Western Alliance Bank Corp. Yesterday, they were down 13% and 10% respectively. Now, they've had a little bit of a rally today. They were up slightly. But yeah, they've recovered a bit. So this is not a crisis that is developing necessarily right now. Catching a little bit of a break today. There were some positive earnings in the sector. But let's talk about what was driving this sell-off in these banks. So the latest signs of trouble came when Zion said on Wednesday evening it faced a sizable charge because of bad loans to a couple of borrowers. And then Western Alliance then alleged on Thursday that a borrower had committed fraud. So this is due to fears of bad loans on the bank's books. Now, why does this matter for gold and silver? Well, first of all, when confidence is lost in the banking sector, individuals, investors, just about anybody wants to get their hands on something solid, tangible assets outside of the financial system, and physical gold and silver really fits that bill. And the SLV ETF really just isn't going to cut it in that kind of an environment. People want physical bullion. Now, when Silicon Valley Bank failed back in March of 2023, immediately wait times for physical bullion extended to months, if not several weeks, even months in some cases. Premiums on a Silver Eagle were nearly 100% over the spot price at that time. So if we had a similar situation right now, that means Silver Eagles are going to be selling for $100. And that cut both ways, right? There was even a video I did at that time discussing how you could sell your Silver Eagles because the premiums had shot up on them so much, even for sellers. And then you could roll into lower cost generic bullion like 100-ounce bars or something like that. And if you did that at that time, you did very well for yourself. It was a good trade. So we may be coming up to another situation where the lack of confidence in the banking system drives a ton of retail investors into the physical space. The physical space is a very small market. And when people want to get their hands on physical metal, it becomes very difficult to obtain very quickly, and premiums explode. Now, they're describing these credit events as one-offs. They're trying to talk a lot of confidence into the market, and that is always what happens, right up until the crisis. So I don't have any insider info. I don't know if the regional banks are about to collapse. I do know that we have a lot of malinvestment over the past decade plus due to artificially low interest rates from the Federal Reserve. And I don't actually expect that the regional banks are going to collapse or anything like that, because they're going to get bailed out. They're going to get bailed out by quantitative easing. They're going to get bailed out by liquidity injections from the Fed, but that's going to be hugely inflationary, right? So it's not that I actually expect the banking sector to collapse. I think there could be a crisis there, and there's going to be a ton of money printed to cover up that problem and prevent the system from collapsing. And that means the price of gold and silver are going to go much, much higher. This is the FedWatch CME tool, or the CME FedWatch tool, rather, which gives us a forecast of what's happening. Already there's a 99% chance locked in of more rate cuts at the next FOMC meeting. You can see if we go to the December outlook, they are expecting, again, more rate cuts, right? That is what is baked into the cake here. I want to look at what we heard from Silicon Valley Bank in the run-up to the crisis there in March. This is a headline from the Financial Times from February 22nd, 2023. Silicon Valley Bank profits squeeze in tech downturn and attract short sellers. So a little bit of foreshadowing what happened a few weeks later. But I want to draw your attention to the CEO's statement. So Greg Becker, he said, "We can comfortably say we have so much liquidity available to us in case something happens. We think deposits will stabilize, but if not, we can protect ourselves if we need to." And there was a lot of this damage control type stuff. He said whether that takes 9, 12, or 15 months to turn around for us, it's not the best case scenario, but it's one we're comfortable with. We have ample liquidity to support lots of scenarios that may get worse and worse. So, when they tell you here that the credit events are a one-off, you can't listen to the banks themselves. Obviously, up until the point that they're shutting their doors, they're going to be telling you that they have the liquidity and that everything is fine. But the reality is we live in a debt-based system. And the rate cuts that the Fed is embarking on now will take some of the pressure off of these banks. But, we're headed for a recession. How many more downturns do you think we could see in the regional banks if they start having to write off more and more bad loans, right? As we enter into a recession, the Fed will have no choice but to stimulate the economy and try to forestall the recession. But the way they do that is they print huge amounts of money. It's very inflationary, and it's very bullish for the precious metals. So look, you can see even now silver appears to be rallying following this retest of the breakout level, and I would not be surprised. Right now it's almost 2 o'clock. We've got about 2 more hours in these markets. I would not be surprised if silver closed well off the lows of the day. That has been the trend with previous corrections like this one here. You can see we didn't close in the green, but we closed well off the lows. Looks like we're shaping up to do the same thing as silver has retouched its breakout level here from that massive cup and handle pattern. What we're seeing is that investors are coming into the market and they're buying. The metals are catching a bid. So yeah, it's a very sharp sell-off in the miners, very sharp sell-off in silver and gold. Again, I view this as a buying opportunity, not telling you what to do, but just giving you my take on this. Also, the RSI down here, which is a measure of how overbought or oversold something is, and granted, the RSI, let me put this caveat in there, can get very high in a bull run, but silver's had gotten very extended here, north of 80. When it gets north of 70, that's where you kind of want to start thinking, okay, are we due for a pullback? Well, now with today's sell-off, the RSI dipping down to 66.42, a much more reasonable level for us to launch on the truly next major leg of the breakout, which you would expect to follow a breakout from this level and then a retest, which we now have. So now we're ready for blast off with the silver price. If you ask me, yeah, it was an expiration date for silver options. I see people talking about that in the chat, and yeah, that does tend to coincide with these corrections. Of course, not always, right? But that is one way you can tell that we're due for a correction. But look, I view this as an opportunity. Probably a lot of you were watching silver break above $54, which we did yesterday. By the way, we had the highest close on the silver price in history just yesterday, over $54 per ounce. You were probably looking at that and thinking like, I'd love an opportunity to load up on some cheaper silver. Well, here you go. Here it is. Again, not telling you what to do, but I've been buying all day, and I think that those who are patient here will be rewarded. Just my take. Leave me a comment down below to let me know what you think about this. I think that we still have a lot of money sitting on the sidelines just starting to pay attention to the metals, and that we are due for much higher prices in the relatively short term. That's my forecast anyway. Thanks for watching, everybody. Stay safe and happy stacking. Don't forget to like, comment, subscribe, share the video with your friends, and I will catch you next time. Smart Silver Stacker out.